Hello. Hello. And very, very soon, within moments, technically now, we're going to begin this cryptocurrency focused episode of the Paradialectic podcast. I am Zachary Winchester.
And I am Eric Miller.
And soon, hopefully, we will be joined by our friend Sam Jones, who is an aficionado who can really talk with the smart words and apparently be pragmatically effective in the world that we are going to be talking about, which is the world of cryptocurrency.
And that's really loud. So the name of the podcast today is called Taking the Orange Pill, kind of referencing the Matrix. And a lot of times when people discover Bitcoin for the first time, it has an orange symbol on it. And like certain other things in life, like Burning Man, like other things that people really get into, that once you discover it, it really changes your view of technology. It changes your view of the world. It kind of alters how you do things. And once you're in, you're really in, and you go down a rabbit hole. So we're going to be talking about some of the practical aspects of cryptocurrency. We're going to talk about some of the political implications of cryptocurrency, this concept of personal freedom, and how do we build that through understanding finance and money. For me, Bitcoin was a gateway drug to traditional finance, and that was unexpected. And then kind of talk about how to get involved and what that means, and how to kind of get over that fear of something that's volatile as Bitcoin can be. So we'll be diving into all of that in just a little bit.
So volatile that I've seen my nominal amount of funds that are in the cryptos bounce around between within a range of $200. but I've been very just one pinky toe in the waters of crypto thus far.
So Zach, Brent, and I were all having lunch one day in October. And I was, as many people interested in crypto do, I was every now and then checking the price, and Bitcoin had gotten down to $10,000. I'm like, hey guys, I was all excited. Like, guys, I think this is the cheapest it's going to be for a while. And I know you guys have been interested in it. This might be the time to get involved. And they both decided to do it. They jumped on, and I helped Zach purchase his. And I think Brent went in through, it was his Cash App, and bought some. And at this point, your price has pretty much doubled, right? Since you went in. Went from 10,000 to 20,000.
Yeah, there was a significant growth there, and it makes me wonder, and it feels a lot like gambling, and I avoided gambling for quite some time, and then found that I have all of the potentiality for a problematic relationship with that. Just from time spent in Reno. There's no other places where I where I do that. Only even slots too, but anyway, as I increase my understanding here, and it is more educated, not just gambling, but
that's why we're drinking scotch. We are sophisticated investors. We are not gamblers.
Hooray. Yeah. The greatest sound in the world. Can you? Oh, yeah. The jingle jangle of ice in a glass of scotch. The scotch makes it sound better.
Yes. Yeah. Ice always sounds better in scotch than any other liquid.
Well, we're still short a Sam. If that happens, we're just going to talk.
So he was having some technical difficulties. And it looks like he's getting them resolved as we talk. So how about this? How about we go ahead and start, and maybe we can talk about, because one of the things, the question we start with is how Sam and I discovered crypto in the first place, and then what we found kind of unique about it.
Okay, when was that?
So Sam found it before me. I found it when hanging out with a good friend on my deck back here. Here's Sam.
Hi, friends.
Hello.
Welcome.
Can you hear me okay?
Yeah, you sound great.
Yeah, we do. We're talking the origin story of you and Brick finding crypto. And
Awesome.
So I'd actually like to start with you, Sam, because I was about to answer, but you found it well before I did, and you got quite involved, and you've been through several cycles, several ups and downs. So how did you find Bitcoin, and what kind of struck you about what did you realize was unique about Bitcoin that caused you to dive so far into it?
Sure. So the first time I heard about Bitcoin was from an article on a website called Gawker. Gawker was a popular blog back. It got shut down, but back like 5 years ago, it was pretty popular. And there was this article about this this website called Silk Road, and Silk Road was like a illicit eBay. So it was like an eBay for illegal substances, stolen information, all kinds of kind of shady type things. But the article was talking about this currency that was making the website possible, because previously when people would start websites like this, they would trace the money and they would get shut down. And the currency was called Bitcoin. So this was I read about it in like the spring of 2011. And I was fascinated by it because I didn't understand how you could have a money system that didn't have centralized points of control or third parties like what we have with PayPal or banks or those kind of things. So that led me to reading about the Bitcoin white paper, which was a technical document that described how the system worked and what made it unique. And in that, it talked about how Bitcoin solved the fundamental problem in computer science, which is called the Byzantine general problem. And it's a question of how do you establish trust in a zero trusted network. So Bitcoin solved this thing that previously.
So what do you mean by a zero trusted network? So for people who don't understand networks and they don't understand computers, what does that mean?
So the challenge in the challenge in creating a digital money is that anything that's digital can be duplicated. Like if you download a song off of a CD or an MP3, like you can copy that file. If you download an email, you can copy that file. So for something to be
that's why music and movies they lost value when they became digital, is because everybody could go on Napster or they could torrent it, and the industry's lost thousands and millions of dollars because there was, like, you can copy it as much as you wanted, and therefore it wasn't as scarce.
Right. And so in order to make a money, you need to have something be scarce. And if there's not going to be a centralized like source of truth, like a bank that says this is how much money everybody has, then what's to prevent people from like creating fake Bitcoins or creating extra copies of the money and misrepresenting it to other people? And so that's the problem that was solved, was how to prove digital scarcity. And it uses something called a blockchain. And a blockchain is it's a data structure that kind of records the whole history of what's happened, and it uses math. And so everybody can use math to verify that the information that they have is correct and unique and couldn't have been created any other way than what's happened up to this point. So it's basically like a whole history. And if you can get the whole history, you can say this person had this amount of money and this person had this amount of money, and one person gave it some of the money to the other person, and we can all agree together that that actually happened and it can't be changed.
So to jump in for a minute, I think it's a really good technical description. I'd like to kind of give more of a poetic description. So for me, and correct me if I'm wrong, Sam, if I'm misunderstanding, it's almost like that there is a digital book, and with that digital book, that there's pages in it. And in this case, every time that there's a new page created, it includes all of the transactions from that last 10 minutes. Is it about a 10-minute block?
So that's why it's called a blockchain, because it is 10 minutes in Bitcoin's case. That period of all the transactions that have happened in that 10-minute period, in the time since the previous block, is all put together in a block, in a discrete unit, that one block recording all of those specific transactions. And then basically a way to think about it is it's stamped, like that block has been stamped, and we all agree that stamp is true because we can all see the work that was done to create that block. And then the next block, that's created has information pointing back to the previous block. And so that's why it's called like a chain. Each block is linked together like a chain. So that's the unique.
So in this book, to really kind of drive the point home, you get a page, but what happens is you have a puzzle, and there's a puzzle out there, and it's called, is it SHA 256?
So SHA 256 is actually, it's actually the cryptographic algorithm. The algorithm is SHA, and it's executed 256 times. That's why it's called SHA 256.
Got it.
So the question, the actual puzzle that's being solved, we should explain why there's a puzzle solved. So if there wasn't a puzzle solved, everybody could just create their own block and just move on and say whoever they could say, I built all this history. So there's like a random number, and the only puzzle that's being solved is all of these computers all over the world are trying to figure out this random number. That's what Bitcoin mining is. And whichever one finds the random number, this process repeats every 10 minutes. Whichever one finds that random number, that's the person who's able to then create the block, add it to the chain, and then show everybody, hey, this was the secret. You can all verify that this was the secret. We can all agree, and we can go on and do this process again. And this is actually how new Bitcoins come into circulation, is every time a new block is created, there's a piece of that block that as a reward that then creates newly created Bitcoins. That's why it's called Bitcoin mining. So one way to think of it is Bitcoin was an attempt to create a digital form of gold. So a lot of the terminology, like mining, we mine for gold, goes back to this idea of, well, gold is really great. Gold was a great money for thousands of years. It's scarce. It has certain intrinsic properties. It can be divided and put back together. It's what's called fungible. It's all these things that make it a good money. Other things have been money throughout human history, but gold was really good. But there were problems with it. Like it's kind of hard to verify. If someone gives you fake gold, you have to go do an acid test or some type of way to verify, yes, this is in fact gold. It's kind of hard to break up, right? Like if I want to just use gold to buy a sandwich, like that's actually why people started using silver, was because it was like gold, but there was more of it, and it could be less valuable, so it could actually be used for day-to-day transactions without getting like really tiny pieces. Right. So there's a lot of really good things about gold, but
so real quick, just kind of wrap up, because I think we definitely want to talk about its comparison to gold, but I want to kind of wrap up that ledger thing. So just to make sure for people who are brand new to this, to understand it in a simple way, that we have this ledger, you create, you have these pages, and these pages are stamped by the people who solve the puzzle. And you have computers all over the world competing to solve this puzzle in order to get rewarded. And because they're getting rewarded, they have an incentive to protect that ledger and to print the correct information in it. Because if it turns out to be the wrong information, then they kind of lose that main chain. They kind of go off in a new ledger that is discarded and ignored as created. So you always come back to the correct ledger, and this solves the ability and solves digital scarcity. And this has not been done ever before Bitcoin. And so what that means is when you solve digital scarcity, you cannot, if I trade my Bitcoin to Zach, and I give him a Bitcoin, that he can't say, he gave you 3 Bitcoins. He can't lie. Defend that. He can't lie, because that entire chain is proven by this entire worldwide network of computers every minute, every day, fighting to prove and protect this ledger. So when people go, what is the value of Bitcoin? The value of Bitcoin is that this is the very first thing in existence that is digital, that is also provably scarce and can't be copied in that way.
And what's really interesting about this is because there's no third party, like intermediary, no bank or like PayPal or anything, it can't be censored. So when we talk about censorship in terms of money, what that means is, let's say you read about a person that lived in Iran who was doing something really important, like maybe they were working on some software that was important to you, or some art or some philanthropic thing. They were doing something that was really important to you, but all of the financial institutions weren't working with the country of Iran because of geopolitical implications. When we say money is not censorable, that means nobody can take it from you and nobody can stop you from spending it. You can transmit money anywhere in the world without any ability to have anybody else intercept or change or stop that transaction. So that's a fundamental revolutionary shift. And people don't always get that right away. Like, well, most of the people I want to transact with, that wouldn't be a problem with. But for some places in the world, it's a huge problem. Some countries limit the amount of commerce that can be done by their people to interact with the global economy. And the other big implication of this invention is that the money can now be effectively, you can think about it like this, it can be stored in your head, because if you're the only person that understands the password, you write it down. I wouldn't actually recommend you just memorize it because you could lose it or you could forget it, I mean. But if you're the only person that can have access to this money, then you don't need, like, for example, pirates needed treasure maps because they would get a bunch of gold and then they'd have to hide it to keep it secure, right? They'd have to actually bury it in the ground and then leave a record of how to get it again because they wanted to be the only person to get it and they couldn't carry a bunch of gold with them. Well, this is kind of the same concept. You're the only person, you have all this control. You're the only person that can spend this money. You can spend it any way you want. You can send it to anyone you want. And you can travel anywhere in the world. You can go across borders, you can do anything, and nobody can stop you from spending it. Nobody can take it from you. And that's a major revolutionary shift that people haven't quite figured out yet the implications of.
So with the mining, there's a thing that I do not understand, and I will be phrasing this very laypersonly because that is what I am here. The miners, the puzzle solvers. So they're doing a thing of great value because it's a pain in the ass and it requires computer power.
Right.
But the functioning of Bitcoin, or I'll just keep it to Bitcoin tomorrow, they all have to show up to because they're not like employees of a thing. They're the people who are doing this because they're incentivized. So so it's a very far-fetched thing, but like hypothetically, like they need to do that. They need to continue doing that.
So inside the protocol is a concept called difficulty. And because remember I said the inflation happens every time someone makes a new block. Well, the inflation rate of Bitcoin is known and predetermined. We know how many Bitcoins there are. We know how many Bitcoins there ever will be, and we know how long it'll take for them to come into existence. So if more people start mining, the challenge, that math problem, that puzzle that we talked about, gets harder. And if fewer people stop mining, like let's say China figures out a way to ban all of their Bitcoin miners, well, now there's fewer miners showing up to work, like you said. And so the protocol automatically adjusts the difficulty to reward the same amount of Bitcoin, but amongst fewer people.
How fucking hard is this puzzle?
It's really
it gets harder the more people that are solving it, and it gets easier the fewer people. Like, it used to be a lot easier to do Bitcoin mining because there were fewer people doing it. And now you need specialized machines, and they're distributed all over the world. And it's at the point now that not only is it the most secure network with the most amount of work being done, but even major nation states could not fabricate enough chips to try to attack Bitcoin at this point without people being aware of it well in advance, because it's crazy the amount of computation that's being done to secure the Bitcoin network.
So one of the only ways to attack the Bitcoin network is that you would have to have, it's called a 51% attack. So if you have 50 plus 1% of all of the mining equipment in the entire world, and you decide to put all of that energy and time and cost, because it costs, I think, several hundreds of millions, if not billions of dollars, in order to fake one block, one page of that ledger. And the only thing you can do when you fake that one page is you can double spend. That means that if I pay you, I can go pretend that I paid you and then also pay Sam. And that's what I just spent hundreds of billions of dollars to do.
Right.
And then
but only temporarily can you double spend even in that situation, because the way you paid him and then you pay me is that you invalidate your previous work that paid him, redo the work, and then pay me. So he gets screwed out of the money that you would have paid him if you could do that. But like you said, you would need to just to be able to do that one little thing, you would need to have half of the entire Bitcoin network, which is almost unfathomable at this point. Like, governments can't do this. There's not enough chips in the world.
So I kind of want to get to, we talked about kind of the fundamentals and kind of the building blocks of Bitcoin and the kind of structure of how Bitcoin as a protocol works. I would like to talk for a minute about kind of the magic of how it came about and the mystery of Satoshi Nakamoto, because this is one of the most fascinating things in the world to me, is that you have this man or person or woman or group of people who ended up coming out of the 2008 financial crisis. And he realized part of the reason why Bitcoin was created is he realized that the governments were printing money at an unsustainable rate, unsustainable. And he happened to have seen these early attempts at creating digital money that didn't work. So proof of work is how describes what happens when you have all of these miners working to solve a puzzle. You have proof that they've been working to solve it. That's how you stamp each of these pages. So he had that, and he brought it together with creating a network. So why doesn't anybody move away from Facebook as much as people hate Facebook?
Because that's where your friends are.
Yeah, they have a fucking monopoly on human connection, communication digitally.
Exactly. So Bitcoin is actually open source software. You can recreate Bitcoin anytime you want to. In fact, many people have. Bitcoin is what we call forked dozens and dozens of times. So you have dozen fake cousins of Bitcoin. But this guy, Satoshi Nakamoto, realized that once you had a big enough number of people involved in this network, that at a certain point, you're going to hit a critical mass. And just like Facebook, nobody's going to want to leave this system because it's been working so well for so many people. One of the biggest events of the last bull run, and the bull run is where money is going up in a market, was that Bitcoin Cash split off to try to fight Bitcoin and become the better Bitcoin. It is now worth like 1/10, maybe 1/8 of what Bitcoin is worth all these years later, because even though in some ways Bitcoin Cash is a little more technologically advanced, Bitcoin has all of the network effects. It's slow, it's simple, but it does what it does really well. And it amazes me that Satoshi Nakamoto got the programming down, he got the human psychology down, and he understood that by creating, this is the other important piece of Bitcoin that kind of makes it special, is it is limited to 21 million Bitcoin ever. Now that is infinitely divisible. So if I want to send you 0.0000001% of a Bitcoin, I can. So if Bitcoin's worth $1 million, I can still buy a cup of coffee with it, right? I can still buy a cup of coffee's worth of Bitcoin 20 years from now. But what he got was, he not only got the programming right, he not only got this idea that the government's going to keep printing money because the government's still printing tons of money, but he remained anonymous. He stayed uninvolved. And in this thing that he said was going to kind of exist in these waves, is going to have a lot of volatility to it because that's going to bring people in, that all of this worked. And we still don't know who this person is. And to me, that's one of the most amazing things about this whole system is, yes, most people who are involved with Bitcoin are involved because number go up. However, it's not just that you can make money doing it. It is revolutionary in that this is one of the most genius inventions of our lifetime. And because of that, you have all of these other cryptocurrencies that are creating all of these other innovations based on it. And that's part of what the orange pill has been for me, is realizing what a unique creation this has been. And that now 12 years later, it's stronger than ever. So.
Well, in the beginning, it was really ideologically driven. I actually don't think Satoshi Nakamoto is a person. I think it's a group of people, and they have close ties to a group of people that were called the Cypherpunks. And the Cypherpunks were heavily involved in using cryptography, which is basically what's an easy way to say that, the ability to share secrets or encrypt things. They were heavily involved in trying to keep cryptography open to everybody to protect privacy. So the goal of private uncensorable money was part of a larger goal of basically maintaining liberty and individual rights. The same thing with trying to stop censorship on the internet and those kind of things. The Bitcoin itself is signed by someone named Satoshi Nakamoto, or some ones that use that pseudonym. But like you said, the technology that was used in it was a combination of 20 years of work, like Bitcash and several other things, several innovations that were put together. So they had been working on this for a long time. And it was released, like you said, right when we were going through the 2008 financial collapse. In fact, in the very first block on Bitcoin, to prove when it was created, to prove that it hadn't been previously created and someone had already done all this work, that day's headline from the London newspaper, which is the chancellor on the brink of another bailout for the banks, was encoded into the first Bitcoin blockchain. So there's a heavy ideological basis at the beginning, long before people thought it was going to be super valuable or if it would ever become mainstream. And now there are, I just looked this morning to get ready for this podcast, it's estimated that there's 100 million Bitcoin users in the world. So that's both incredible that there's 100 million people that are using this magic internet money, and also still shows that we've got a long way to go, because there's 8 billion people in the world. And so it'd be cool when we go through this podcast to really talk about why do our listeners even care about this, other than maybe they hear it's a cool investment, or it's starting to get into a hype cycle, right? They're starting to, it's hitting all-time highs, and people are getting excited and they think they can make money. So what's in it for them? So that'd be a cool topic to move into.
Mm-hmm. Definitely. So I'd like to jump in for a minute and talk about how I discovered Bitcoin. So I read that article that Sam read back in 2011, and I think it was at maybe like $300 then, and then it dropped to 30. That was one of the first big famous crashes of Bitcoin. And I actually had started looking into what it would take to buy Bitcoin then. But I'm not technical. I didn't know any people in IT. And so I tried for a while and I gave up, because I'm like, this would be cool. And I grew up not with Cypherpunk, but with a cyberpunk background. I loved the magazine Mondo 2000. Had a lot of these ethics. It talked about how technology in the digital world was going to change the world. It was huge into VR, all of the things that are coming together now. And it's actually really fascinating to me that actually cryptocurrency and the blockchain in VR are beginning to combine very solidly, so that you can actually buy permanent digital items in digital virtual reality based on cryptocurrency soon. And I think that's going to be the next big area. But I was sitting back on my porch, and my good friend Corey goes, "Hey, have you heard about Bitcoin recently?" I'm like, "Yeah, I heard about it in 2011. It was like, it went from like $30 to 300 back down to 30. And it sounded pretty cool." He's like, "Yeah, it's 3,500 right now." I'm like, "What? What the fuck?" I'm like, "Really?" And he's like, "Yeah. And here's the thing. Have you heard about Ethereum?" And I'm like, "What's Ethereum?" He's like, "Well, there's a bunch of different cryptocurrencies now, and Ethereum is Bitcoin, but not only is it like this unique, scarce digital item, it is a world computer. It is something that you can trade like Bitcoin, but it is also, and is programmable like Bitcoin, so it can adapt and change. But you can actually create not just programs, but what we call smart contracts within Ethereum." And I'm like, "Wait a minute. So what would you use a smart contract for?" And he goes, "Well, let's say that you wanted to buy a house and you didn't want to go through escrow, right? You didn't want to go through all of these people in the middle. You just wanted to prove that the money went from my hands to somebody else's hands when an event happened. You could create a digital contract where that would happen automatically. And you can use this to program all sorts of things." Well, I was like, that is amazing. That's astounding. And this is where I was sold. One, I realized that I thought it was cool back 8 years before, or 6 years before, and I'd missed out on it. And then this other thing is, I understood now what it means that if you have something that is digitally scarce and valuable, that can be its own program, that you can evolve and create new and more intense programs, that you're going to create some amazing, amazing things. And to kind of finish that up, now 3 years later, we have smart contracts creating what's called DeFi, decentralized finance. Now, I don't want to get too deep into this because we're kind of trying to stay basic here, but basically, these smart contracts allow people to make many stock markets within in lending institution, many banks out of code run on Ethereum that don't involve other people. You can create decentralized autonomous organizations and decentralized exchanges that are like little stock markets, all run on Ethereum, that you can make a lot of money on, all run by code. And this is fascinating to me. This is astounding to me, because this is not happening anywhere else in the world. So
Yeah, you think about the implications. Like, we don't need title companies anymore because we can track the history of an asset or prove ownership of an asset. So now, when you're buying, you used the example of when you're buying a house. When you're buying a house, you have to pay money for title insurance to establish ownership or ownership rights or liens and all those things. We can do it digitally, and that's just one area of innovation that can happen out of it.
So I'm understanding what's valuable about it, but I don't understand. I'm not even sure I'll understand the words that you say about this. How that then computes to it being worth this many dollars or rupees or yen.
So the best way to think about why it has value is just that there's a market for people that have it, that want to sell it and buy it, and the supply and demand ends up being what determines what the value is. Like, all markets just evolve from people trading. In the beginning, somebody spent 10,000 Bitcoins on a pizza. The first recorded transaction, which is hilarious because right now that's worth, how much is 10,000? So if a Bitcoin is approaching $20,000, I'm bad at math here, but 20,000 times 10,000, that's like $200 million pizza.
Yeah, there's actually a Bitcoin holiday. It's called Pizza Day, and the poor bastards interview that guy every time, and he looks sadder every year.
But he's a hero because if he doesn't make that first transaction, which it's funny, he actually did it several times. So why would someone? So starting from that point right there, why would someone buy a stranger across the country a pizza for 10,000 these fake internet points or whatever? Because at that point, it's novel, it's collectible, it's just interesting, and $20 doesn't matter, right? Like, I'll play around with this right now. And then from that point, now we've established the first trade and a value. And what happens is more people want to do this. This guy runs out of Bitcoins for his pizzas because he can't keep giving 10,000 Bitcoins out for every pizza. And people start offering more money, and then the price goes up. So until we have millions of people all participating in this simultaneously, and that's what ultimately gives it that value.
Something else that's really important is Bitcoin is what's called a deflationary asset or deflationary currency. And this is different than normal money. And this is part of what is so powerful about Bitcoin. And again, why I call this taking the orange pill. It's not just about making money. I found that by getting involved with Bitcoin, I think about money so differently today than I did 3.5 years ago. Because I started to wonder ask that question that you asked, which is, why do people care about Bitcoin? And if people, and one of the biggest criticisms about it is it's not worth anything. And I'm like, obviously it's worth quite a bit because many people are millionaires and billionaires because of Bitcoin. Like, that happened. That's a fact. And what I started to realize is this is again why that group or that individual Satoshi Nakamoto created this, is that the more that you produce US dollars, and we just created 22% of all US dollars in existence were created this year. Let that sink in for a minute. We printed so many trillions of dollars this year that means that money, the US dollars, are being worth less and less over time, which is part of why the stock market went up during the first pandemic since the Spanish flu, when most of the world stopped working, is because when the dollar is worth less, things that are priced that are also kind of like money, like stocks and real estate, they go up relative to the dollar. Bitcoin you cannot produce more Bitcoin, so that the more people realize that Bitcoin is a store of value, that is, Bitcoin tends to go up in price over time, the more people want to put their savings into Bitcoin, because a government can't go, well, we have a pandemic, we're going to print another 20 million Bitcoin. Therefore, that Bitcoin's worth half that money. In fact, this is what woke up a lot of corporations. So one of the biggest Bitcoin heroes of 2020 is, can you guess who it is, Sam?
It's a company called MicroStrategy.
Yeah, and Michael Saylor. So Michael Saylor, when the stock market crashed and Bitcoin crashed along with the stock market back in March, he goes, wait a minute, I have most of my money in cash and they're printing trillions of dollars. He has a MicroStrategies, like Sam mentioned, is a $1.2 billion company. And Michael goes, I don't want my money in bonds. It saved me up to this point, but bonds aren't worth that much anymore. Stock might go up, but not that much. Gold, I can't buy hundreds of millions of dollars worth of gold and like hold it myself. What am I going to do? And he started researching, goes, I'm all into Bitcoin. So he put millions of his own dollars in, and then he talked to his board, he talked to all of his lawyers, and he talked to his accountants. And he goes, read these papers. I just put all my money in. I want us to put all of our money in. And that company ended up putting in, and this is a publicly traded United States-based company on the stock market. They put $425 million into Bitcoin. And then Square app, and then they also own Venmo. No, the PayPal owns Venmo. Square not only sells Bitcoin on the app on your phone, they decided to put in 1% or 2% of their holdings this year into Bitcoin. A publicly traded US company, huge on the stock market, put in $50 million. And this is what gives Bitcoin value, is people realize it has a tendency to go up over time. And part of the reason it goes up over time is called the halvening. So there's currently, out of all the 21 million Bitcoin produced, 18 are currently out there. And then every 4 years, the amount of Bitcoin being released by mining reduces by half. So think about a fire hose. If you have water coming out of the fire hose and you have the same amount of water and you squeeze that fire hose, it comes out with more pressure. So every 4 years, that squeezes the supply of Bitcoin, and the value of it goes up because it's more scarce. Okay, that's a mixed metaphor. It's not exactly right. But the idea here is when you reduce the amount of Bitcoin available, it becomes more scarce. And since people realize that when something's scarce and valuable, it goes up, people want to keep more of their money in it. Is that?
Yeah. So when some money puts $420 million into Bitcoin, there is there registers an uptick in that moment. Like if you.
So what he did is he managed to go, was called, people, billionaires and major companies that buy Bitcoin, as long as the market has enough liquidity, they can trade off of exchanges. So what they do is they find other billionaires and other companies who want to trade off the market, so that they were able to buy a lot of this Bitcoin without moving the market much. That was actually one of the skillful things that they did. However, there's kind of like that underground Bitcoin. There's less and less of it now, because not only do you have MicroStrategies is buying more, Square bought some, but people believe a lot of other corporations are now wanting to put this on their books to protect against the US dollar deflating. But you also have what's called the Grayscale Bitcoin Investment Trust. This is one of the few things that you can buy on the stock market that represents Bitcoin. So if you don't want to pay taxes in your Bitcoin and you want it in your retirement account, they're the people you go to. They used to have, I think coming into this year, they had $1.5 billion dollars under assets under management. But when that stock market crash happened, they jumped up by $3 billion, and they now have a total of, I think, 11.5 billion assets under management today. This tells you how many billionaires and institutions and rich people are buying Bitcoin this year.
And it's possible for it to spike drastically if a real massive trend happens amongst the super wealthy or just a ton of people.
It's not just possible; it's happened. So I said I've been watching Bitcoin since 2011. So that means at this point I've seen at least 4 full bubble cycles. And it's really important. I'm going to make this point right now. So first off, a little bit of housekeeping. This is not investment advice. I am not a personal financer. I'm not licensed. I'm not. I have a personal interest in this space. I invest my own assets into this space. I tell my mom to buy Bitcoin. So obviously I benefit if it goes up. But I need to say that this is not investment advice. This is just my own opinion. But I've seen bubbles, and so the interesting thing about cryptocurrency is that it'll hit a new all-time high. Bitcoin approaches the highest price it's ever been. That means that every single person who has ever bought Bitcoin at any point in the last 11 years who still has a profit, because it's at an all-time high, right? Everybody gets that concept. So now people are making money in the space. Whatever they paid is now going up. So then the media starts reporting on this. The media starts saying, Bitcoin's breaking through these crazy numbers. Can you believe this shit is $20,000 a unit? It's wild. So then the hype starts. Everyone starts talking about it. My phone starts blowing up nonstop from every one of my friends. It's like, hey, what can you tell me about this? That is the point of maximum financial risk, because if you're buying into an asset at an all-time high and you're doing a lot, then that means everyone else in the entire world who owns it, it's worth more than what they paid for it, and they have a profit. So that's what starts this media hype, basically, is what starts the bubble again, over and over and over. And then it goes up a crazy amount, sometimes 10x, 20x. The last three of them have all been at least 20x bubbles. And then inevitably greed turns over to fear, and it crashes, and it spends years going down in value, which is, if you're buying it on a regular basis, is great, especially if you get started during a bubble, because that's exactly the time when you should be buying it. You should be accumulating it while it's going down, so that you're getting more and more and more each time you buy, so that when the cycle repeats, you benefit from it. It's also the time when people don't buy things. People don't buy assets that are going down in value, because psychologically they go, why am I buying something that's I'm losing money? I'm losing money. The same way that their greed takes over when it's going up, and they go, I got to keep buying this. I got to keep buying this. It's going up. I'm making so much money. I'm making so much money. So this like emotional cycle that from greed to fear keeps happening, and we keep going into these bubbles. And because the Bitcoin inflation rate decreases every 4 years on a set cycle that Eric mentioned, called the halvening, we actually can time these bubbles fairly regularly to the cycle, to where we are in the cycle. And we are this is the exact same situation that's happened the last two times. We're like at the very beginning. Like, you can go back and look at the price charts and see like April, March 2017, the last time we broke the previous all-time high. And the media people start searching for it, people start learning it, they start tuning into podcasts like this. And then we go into a bubble for the next year, and it reaches way beyond what everybody thinks it's going to be for that cycle, and then it crashes, and the whole thing starts over again.
So if you want to see a visual representation of that, I put the Bitcoin rainbow chart onto the event page of Facebook, and so you can go into it and you can actually see where Bitcoin started back in 2009 at 0.008 cents, and how it kind of went up in these arcs, exponential arcs over time. And it was called a logarithmic scale. So if you look in a standard price chart, you see this big spike and another spike happening right now, and it looks like a flat line behind it. So a log chart kind of makes those jumps bigger, those earlier jumps, so you can see how truly massive those Bitcoin gains have been over the last 11, 12 years at this point. And like Sam said, we're just getting involved. So if this was 2017, I still haven't heard about Bitcoin for 2 more months.
Right.
And I got in, and when I got in, I like with many things, when I get really excited about something, I dove into it. In fact, Corey got bored with it. I'm like, what are you talking about? You're getting bored with it. Come back. You told me this is amazing. It is really amazing. And so we started kind of putting money in. And for me, what struck me is I'm getting started very late in life saving for my money. I've followed the advice of do what you love, and the money will come. And I've done what I loved since I was in my 20s, and money didn't come. I ran a martial arts studio. I really enjoyed it, but then I and I made some money, but I didn't invest it like I should have. And then I went into grad school, and that money tapered off. And I now have tons of student loans. So not only was I kind of like struck by the technology and by the revolutionary thought and by all the brilliant people being drawn to this space, because there are a lot of brilliant people involved in crypto. But I also realized that I might be able to catch up in my savings. And right now, again, like Sam said, this isn't investment advice, because people ask me, how much money should I invest in Bitcoin? I'm like, well, one, I don't know if you should, because I don't know anything about your personality or your financial situation. But for me, the reason why I started putting money in is, one, I got it. I realized that a lot of people weren't investing in Bitcoin because they're scared. And that gives me an advantage. If I know that if people who I respect and I know are brilliant and know are very intelligent are being able to talk to me about why they're invested, if I start listening to people involved in the space and I hear them, I'm like, this makes sense to me, then I can go, okay, people hate this. They think I'm a fool for investing in it. And that's good for me, because if everybody thought it was a good investment, there wouldn't be much money be made at it.
Right. You'd have no opportunity if everybody understood what like I understand. So one of the things that I understand besides making money is that you need a hedge against inflation. You need something. If we're going to keep printing money like crazy, and wages are not rising as fast as inflation. That's why I read something that if minimum wage had kept up with inflation, it would be $22 an hour right now. So
right.
So people are trying to fight for $15 an hour minimum wage, and that's why people are having a harder time buying houses. That's why we're hitting all-time highs in the stock market. Everything that's not dollars is going up, and that's good for if you have a lot of debt, like you have a lot of student loan debt. Then the actual the value of your debt's going down because dollars are worth less, or if you have big mortgages and inflation's happening, then the value of that debt's going down. It's getting better. But for people that are approaching retirement, or even like in their midlife, like you said, seniors on fixed incomes, people are on fixed salaries that they can't protect their money. And whereas even in the US, we have relatively low inflation at 3%, there's people all over the world in other countries where their dollars are just worth less and less every single, like they have sky high inflation. They need to protect their savings. So this offers, so traditionally people use precious metals for that. They bought gold. But the thing about gold is, because I'll come back to it, when gold starts getting very hyped up, more gold mining companies start. More gold shows like Gold Rush come on, and everybody starts talking about gold. And actually more gold gets extracted from the earth because more people are mining it. You can't extract more Bitcoin. When we say finite supply, we're serious. There's no way to get more Bitcoin. So it doesn't matter how, so that's part of why these bubbles are so spectacular, is because for a period of time, there's no way to get more Bitcoin, right? The market dries up, everybody doesn't want to sell their Bitcoin, and the price starts shooting up and up and up. So in some sense, it's more volatile than gold, but that inflation rate is totally fixed. There's no way to get more. So it's really good protection if you're concerned about inflation. If that's a concern of you, like you're a senior approaching retirement, and you need to figure out how to make sure that if inflation keeps getting higher and higher, it's not going to wipe out all your savings. Maybe this looks like a good place to put a little bit of your retirement money.
Mm-hmm. So when it comes to this, so people ask me, okay, so how much, when should I put money in? So for me, I started to realize that I have an opportunity with moderate risk. So one of the questions that people asked me before this podcast was, how do you know that Bitcoin is not going to go to zero? And I don't know that Bitcoin is not going to go to zero. And it could go to zero. So there's a famous term in Bitcoin circles called HODL, and I'll post the original message where this term came from. So it's HODL, and it was a misspelling of the term hold. The idea is, if you're always selling your Bitcoin and the price is always going to go up, that you're never going to be able to get back in at that higher price. So what this guy decided to do is, instead of trying to day trade Bitcoin and try to make money on the swings, he's like, I'm not good at that. I know I'm not good at it. I'm just going to hold, and I'm going to let that value go up over time. Well, I did that during the last bull run. So I'm not giving financial advice. I'm not a financial advisor. I'm talking about what I've learned and what I've done and why I'm making the choices I made. And so everybody's telling me to hold. And so the money that I put in over like 6-9 months, it went up really, really high. And everybody was all hyped, and everybody said it's going to keep going up and keep going up. I didn't know about these cycles of the bubble. I didn't understand that process. So I took some money out in profits, but I didn't take that much out. And I was lucky that I had learned enough that as the price was going back down, I didn't lose more than I put in. And so I didn't make money on Bitcoin and crypto. I didn't lose money on Bitcoin and crypto, but here's what happened. I got the best financial education of my entire life, because Bitcoin moves like dog years compared to normal finance. So this time when the entire stock market was about to crash in March, I actually pulled my money out before it dropped 6%, because I had learned from Bitcoin that why these moves happen in the stock market moves to me at a snail's pace compared to how cryptocurrency moves. Now, I don't recommend that people time the market. I'm not going to try to time the market that much, but I wanted to pull my money out to save it because my savings right now is so important to me because I'm middle-aged and I still have a long way to go for that savings. I would not have understood that without Bitcoin. So now that I understand these cycles, I have a plan and I have a strategy. I know that you have Bitcoin, which is the big dog, that it goes up more, it goes up on a steady rate, but when it drops, it doesn't drop as far as these other cryptocurrencies that are much lower cap. That means that they have a smaller market cap, and they are so much smaller than Bitcoin that small changes in the amount of people investing in them can drive the prices of those cryptocurrencies up really, really high. The problem is when people pull money back out of those, they also drop down really, really, really fast. So by me, I mainly invested in Bitcoin. I've got another big chunk in Ethereum. Then I've got another chunk in kind of big cap altcoins. And I've got some in some really small, tiny cap altcoins. They're like penny stocks that I believe in. And what I do is I wait for those little penny stocks to blow up. And then I put that money into the mid caps. When they go up, I put that money into Bitcoin and Ethereum. And then as I think this cycle is going to end, again, this is my personal thing. This is not advice for anybody out there. Then I plan to take a portion of that back out and hold the rest, because this cycle that should be wrapping up here in about like 9 months to a year will kind of repeat itself if Bitcoin doesn't go to zero years down the road. But if it does go to zero, I want to make sure that I'm taking profit out to put it into other investments, to enjoy, to put into artwork, to put into my community, things like that.
So I go ahead. Sorry.
Oh, the question, the disclaimers of this is not investment advice. That's just because somebody does something along your spoken rubric and then is like, "Fuck you, you made me lose my money."
It's actually legal protection. You can't give financial, and also from an ethical standpoint, if you're invested in something, you should let people know that you're going to benefit if that thing goes up. So it's just ethical and legal protection. Yeah. I've seen everybody do that for years on YouTube and things like that.
I get it, that because then there could be false, like bad actors or just biased actors who are just okay. I get it. I
and the same thing with tax. Like if you're not an accountant, you can't give tax advice. So I would say for educational reasons that every time you trade cryptocurrency, it is a taxable event. So you can't go to crypto. People, I think a lot of times people were trading a lot of crypto back in 2017 because they thought that the government couldn't track it, and they can. So Bitcoin is pseudo anonymous. So when you make a Bitcoin transaction, your name's not attached to it, but the wallet that you hold your funds in is attached to you. When you want to move cash, US dollars, into crypto, and when you want to cash crypto back out. So some of the questions that we had were, how do you take money and turn it into cryptocurrency? And then how do you take cryptocurrency and turn it into money? So kind of the biggest and oldest player in the space is Coinbase. And that's where most people have bought their Bitcoin over time. You also these days have some. Now, this is one of the things that makes people very bullish, very excited about the place that we're in right now. We just had PayPal get involved in crypto. And this has been the year of institutions that used to fight crypto, used to hate it. PayPal was one of those. All of a sudden go, we're now going to offer Bitcoin Cash, Litecoin, and Ethereum on our platform that hundreds of millions of people all around the world use. And they're already eating up most of the Bitcoin supply. You can go into the Square app and you can buy Bitcoin there. It's low fee. It's very easy to do. And you can immediately take that Bitcoin out, send it to your private wallet. We'll talk about that in a second. Voyager is a good app on your phone that you can use. If you want to do, and Sam is a big proponent of dollar cost averaging. I believe in it as well. We can talk about that in a minute. The company Swan will post a lot of these resources in the comments of the Facebook group. But those are some ways that you can take your US dollars and put it in, and then you can take it back out when you need to. So if I was going to tell my parents who are in their 80s, if they wanted to invest in Bitcoin outside of like their 401k, I would say that, which you can do through the Grayscale investment trust or GBTC, I would say that just use PayPal. My parents don't care about like sovereign money and libertarian ideals. They don't want anything complicated. They don't want to hold their own keys. They just want to know they have some Bitcoin and watch it go up and down. So PayPal is probably the best way to do that. However, if you're going to take it more seriously, you want to own your own keys. So Sam, do you want to talk about what that concept is, why it's important, and some of the best places to store your own Bitcoin keys?
Sure. So that's really interesting point. So a lot of these companies like PayPal or eToro, for example, will let you buy Bitcoin, but they won't let you, actually eToro does, but some of them will not let you withdraw the Bitcoin. That means you can't buy it on PayPal and then move it off of PayPal. It's basically always PayPal Bitcoin. And that's okay if your goal is to get exposure to Bitcoin. You want to have, if it goes up, you can sell it, you can buy it on PayPal, it can all be done right there. If you actually want the other benefits that I talked about, which is the reason it was created in the first place, like being able to send it anywhere in the world and store it, and you're the only one that has any control over it, you have to buy it from a place that will let you move it off of their website or off of the app on your phone. And so like you said, that the first one, that is the biggest one right now that has been for a while, is called Coinbase. And so you can buy it on Coinbase, you can keep it on Coinbase just like you could anywhere else. But if you want to, you can withdraw it, or you can actually use it like a money. See, if you buy it on PayPal, you can't use it like a money, right? Because you can't withdraw it, so you can't send it anywhere, right? There's no way to use it.
So actually, to just a small caveat here, you can use it as money because in the next month or two, PayPal is going to allow you to take your Bitcoin or Litecoin or Ethereum balance and spend it through PayPal at merchants. What you can't do is you can't actually take the Bitcoin off as Bitcoin and send it somewhere else.
Okay, so you can pay. That's really interesting, because that means somebody so they don't have to have a Bitcoin address. They just have goods and they accept PayPal, and now PayPal will do the conversion for you. I get it. Okay.
Yeah, I honestly think that they did that for the matter of hassle. If people had to manage their own keys and were losing their Bitcoin, like PayPal would get so much hassle from so many people. Right. This way, they don't have to worry about the legal problems.
So the easiest way to manage your own keys, like you said, is something called a hardware device. It's like a little, like a USB flash drive, and it plugs into your computer, and that's what stores your keys. The keys are the ability to spend the money, right? If you have the keys, you can spend the money, just like keys can open a door. So that little device that sits in your computer or your phone, the hardware wallet, stores those keys. And they're actually, if that device gets lost, it's okay because it has a PIN code on it. And if it gets broken, it's okay because the keys are actually generated from words that you can write down on a piece of paper. So as long as you have that piece of paper, you can always restore the wallet, even if something happened to that device that actually helped you to receive and send the money. So there's easy ways. A company called Ledger makes a very popular hardware wallet. If you were going to buy that, I think it's like $60. I highly recommend you buy it directly from Ledger, because there are people that sell fake counterfeit ones that are designed. So the thing about being your own bank is there's nobody to call if there's a problem. So if that scares you, and I think it probably scares a lot of people, then it makes more sense to work with one of these large exchanges like Coinbase to do your buying and selling and transferring. Or if you really want the easiest thing with the least amount of control, then PayPal makes a lot of sense too.
Mm-hmm. And so a lot of old school Bitcoin folks are like, that's sacrilege. Like, you hold your own keys or it's not your Bitcoin. But really, for the most people, they're not into it that deeply. They might believe in it. They might want to benefit from it. But they don't want that responsibility of holding that money themselves. When you hold that money yourself, it's a bearer asset. So you have people who are really rich, like crypto billionaires.
What is a bearer asset? Let's explain that.
Yeah, bearer asset is, so if I have diamonds on me and I have diamonds in my home, then someone can come into my home and like rob me and steal my diamonds. And therefore I don't want to have like diamonds just like hanging out on my table that someone can keep. So if I ever get to the amount of Bitcoin where I think that I would be a target, and here I already do this, I make sure that my Bitcoin is stored securely outside of my house in a place where I can't get to it easily, where someone can't just mug me and go take me to your Bitcoin. Like, and if I ever become really rich, I would increase that security so that it'd be hard to do. But if you have it on PayPal, I mean, it's just like someone trying to rob you for your stocks. It's hard to do. You have to liquidate it, right?
Mm-hmm.
So that becomes an important key is, yes, store it on a ledger. That way, you know that if the exchange that you got it on is hacked. So here's the thing: when you hear about Bitcoin being hacked, which is one of the big scare stories, Bitcoin itself, the actual protocol, the program of Bitcoin, has never, ever been hacked. But the exchanges that you store your Bitcoin on, those have been hacked. And this is why you don't want to keep a large amount of money on these third-party exchanges, is because if they get hacked and they don't have the funds to support that, you could lose your money for good. You could lose your crypto for good.
But
So
Brick, you just told us that we should keep it on PayPal if we don't want the hassle. So how do you square those two things?
So because that's one of those things where we already tend to keep things like our money in a bank, where PayPal is the sort of company where if it's big enough, so Binance is a big exchange, has been hacked many, many times, but Binance is so big and they know that they're going to get hacked that they keep a lot of hard crypto on the side. So when they get hacked, they just pay they just pay everybody back. They actually expect to be hacked. PayPal is so big that if they ever get hacked, they don't want to lose their reputation as a financial company. So they're just going to pay everybody back. You're not going to lose your crypto that way. And that's kind of that's exactly what Bitcoin is supposed to prevent, is you having to rely on somebody else. But it's also the real world, and we have to be practical. Some people are going to prefer to rely on the third party than take that responsibility on themselves.
And you can do both. You can get started with it on PayPal. And then if you want to receive it from somebody in exchange for goods or services, or if you want to have more control, now that you've been in the space for a while and you're comfortable with it, you can go buy one of these devices and buy some more from a site that lets you withdraw it, or if PayPal eventually lets you withdraw it, and begin to use that solution too. But I think you're right. I think for average people, Coinbase was the easiest thing ever, because you could set up reoccurring buys to dollar cost average. And you don't have to transfer it to a hardware wallet. You don't have to take it off the website, but everybody already has a PayPal account, so it's even easier.
Mm-hmm.
But
Use
Coinbase
PayPal.
Safest still? Coinbase is the safest, most reliable. Like, you're not going to.
I would say of the major Bitcoin exchanges, PayPal has the most history, is the safest, and probably the least likely to get hacked, or because they keep 97% of their funds offline. So yeah.
And you also have the option to have a more secure form of storage. You can make sure that your particular funds are stored offline with them, and that if your account gets hacked, it takes a full day in order to get your money back out. So you can put added levels of protection there as well. So let's talk about some security protocols. So if you have a small amount of crypto, and you lose it, or someone hacks you, it's not a big deal. But this comes back to that investment question. Like, how much should I invest? How do I know Bitcoin's not going to go back down to zero? Well, what are the big threats to Bitcoin? At this point, there used to be a bunch of possible threats to Bitcoin. At this point, I see 2 or 3. So I see one, someone could introduce a bug into the code of Bitcoin. It's one of the developers that they didn't catch, and it can cause the system to crash. Okay, what would happen then? They would kind of go back to a previous iteration of Bitcoin. Some people who recently made transactions would lose those transactions. And because it's programmable, you would regain all of the old transactions again. So some people would lose money, but not everybody would lose money. That's one possibility. Another possibility is a technological innovation like quantum computing that could hack Bitcoin. Well, we know that, and we aren't going to talk about why, the Bitcoin algorithms are actually fairly quantum computing resistant. And every other bank and financial institution in the world that has passwords on computers are going to get hit a lot harder than Bitcoin would. So we're going to have a lot more things to worry about than Bitcoin, should that be developed. But the third one is sovereign states or a group of countries going, we don't like Bitcoin, so we're going to make laws to make it very difficult to use, or we're going to ban it. And that could, even though some people would still be using Bitcoin, could drop the value of Bitcoin so significantly that it's no longer has the attraction of an asset that it once did for many, many years. But here's the thing, and I think this is really important. If we make it through this next crypto cycle, and this next crypto cycle happens like we believe it will, so there currently Bitcoin is $20,000. And based on past cycles, that doesn't mean that this is what's going to happen in this current cycle. But based on past cycles, we're likely to see Bitcoin at a price somewhere between $40,000 and $160,000 in the next 6 months to a year and a half. If that happens, there are going to be so many crypto millionaires and trillionaires, and so many of these companies are going to be making so much money on Bitcoin that you now have so much money to lobby governments in order to create protections for crypto. It gets increasingly harder for that legislative attack on Bitcoin to happen. Do you agree with that?
I actually think we're already there, and I actually so I would agree with you that those were typically the maybe the three riskiest things at this point. I don't think Bitcoin can go to zero. In fact, I know it can't go to zero, because if it gets anywhere close to that, I will buy every single Bitcoin up, and it's not just me, but every other person that's been doing this for a long time that wishes we could go back in time. I talked about as a collectible, like this has a long history at this point. But to address your 3 points, I feel like all three of those are fixable. If the first one was if there was a bug in the protocol. If there was a bug in the protocol that showed up after 10 years, we would absolutely roll back to the previous. In fact, this has happened. It hasn't been hacked, but there have been problems where somebody released a specific client and the rules were interpreted differently, and it actually split the chain under two interpretations. And so it happened very quickly, and we had to decide which one. When I say we, I mean the group that figures out which chain to follow is all those mining computers that are building, because they're the ones spending all the money and doing all the work. And so they have to figure out really quickly with a massive economic hit if they're not right, which chain to follow. So we've already gone through that. It can be fixed. It's not a problem. If there was a quantum attack, we can change the encryption protocols to be even more quantum resistant than they already are now. Like you said, if there's a massive innovation in quantum computing that allows us to solve all current problems with encryption, then there's no such thing as privacy in the whole world. Bank accounts, everything is open, and we have even bigger problems than there's a problem with the money. And the third one about lobbying, Coinbase claims that there's at least 40 million Bitcoin users in the United States right now. You've also got major companies like PayPal, like MicroStrategy, and soon. So one of the reasons I don't think we're through our last bubble is because we have not had what's called an ETF yet. An ETF is an investment vehicle that lets you put these things into your retirement accounts, for example, or lets large pension funds or large institutions invest in it because they need the safety of an ETF to be able to access that investment. So because we don't have an ETF, I've been involved in this for the better part of a decade. I don't have any Bitcoin in a tax advantaged like an IRA because I can't buy an ETF to protect it. So I think the same thing happened with gold. Once there was a gold ETF, there was a massive bubble because of that, because now anybody that wants that in their long-term retirement accounts and wants to have the tax advantages can have access to it. But even before that ETF happens, even just right now, as of right now, today, Bitcoin is $500 billion. And so that's 40 million people in the US and a lot of people with a lot of money in it. And the lobbying pressure to fight any type of crypto regulation would be enormous. And even if one country did clamp down hard, which has happened, Russia's clamped down very hard, China's clamped down very hard at different times, the rest of the world doesn't give a shit, and they're going to keep going. And so I don't think it can go to zero. At this point, I used to think forever, for many, many years, I was like, well, it can all go to zero. I don't think that can happen anymore. I think we're way past that point. And I also think that those concerns are so much less than they used to be because of the adoption and the amount of users that trust it.
And yeah, here's the other thing too. It's programmable. So if one version of it dies, and there's so much innovation happening now that even if Bitcoin went to zero, even if Ethereum went to zero, I would be continuing to look to this space and this sort of technology for the next Apple, the next Tesla, the next FANG, the next Google, for all of these, the biggest. So let's think about this for a moment in traditional finance. So traditional stocks and bonds. We had the entire economy collapse. We have millions and millions and millions and tens of millions of people out of work currently in the United States. The entire world is out of work and locked down for a pandemic. Why are stocks still going up? Well, the stocks are still going up. Almost the majority of the stock market is currently those what we call FANG stocks: Facebook, Apple, Google, and things like that. It's innovative technology-based companies. Cryptocurrency are the next level of innovation technology-based companies. So this is where for decades to come, innovation is going to come out of. And so we have a question here in Search of Enlightenment asked, and I don't know if we can see all the comments. I think we're only seeing a few of the comments here. So if we're missing your questions, we apologize.
Which is the best crypto to invest in?
Which is the best crypto to invest in? So I'm not going to give investment advice. I'll talk about what I was doing if I didn't have this sort of fascination with the entire crypto space that I have now. If I knew a little bit about crypto and I didn't have much fascination, I personally would put 50% of my investments into Bitcoin. I would put 25% into Ethereum, which is the next largest cryptocurrency, that world computer that we talked about earlier. And then I'd put probably 25% into Chainlink, which is what's called an oracle. Not going to get into what that is, but I guess basically if Ethereum creates smart contracts, an oracle is what connects that smart contract to the real world by telling us when an event happens in the real world. So if I want to say I want to trade one cryptocurrency for another, that oracle is going to tell me what the price of each cryptocurrency is so that contract can work. Chainlink makes that happen. There are some other categories of cryptocurrencies that are really useful. Some are going to act like money. So some ones that you can invest in are kind of like a smaller version of Bitcoin, like Litecoin. Bitcoin Cash is designed to be more money-like than Bitcoin proper. You have
currency-like. More currency-like.
Thank you for the amendment there. Then you have things like Ethereum. They're called Ethereum killers. So you have things like Polkadot, and you have things like Cosmos and Kusama, and platforms like this that are going to be platforms that you can do a lot of things in. You have what's called DeFi. So these are these kind of like internet cryptographically secure banks that allow these massive exchanges of money back and forth within the cryptocurrency space. And one of the big draws right now for people in the crypto is you can earn interest rates within cryptocurrency that like you used to be able to maybe get kind of like 30, 40 years ago. Like a savings account used to maybe get you 5 or 6%. Your investments, like stocks used to in bonds, would give like 5, 6, 10, 12% dividends in some cases. You can't find that now. Bonds are sometimes what we call negative yield. Like there's no money coming out of them at all. Dividends are where you get paid the profits of a company. Those have dropped tremendously. Your savings account, you're lucky if you get 0.25%, if that, in your savings. But I can put my Bitcoin into BlockFi, which is a great company, and I can earn 6% interest on my Bitcoin. That's crazy. Sam?
So that would actually be a really good argument for not using PayPal. So if you want, so there are basically, think of it like this: there are crypto bank accounts, savings accounts that pay interest, and if you're able to move your cryptocurrency around to something like BlockFi, then you can buy it, you can move it over there, and as long as you trust BlockFi, then you can be. And actually, I use BlockFi too. They're one of the few companies that I actually trust with some portion of my assets. But BlockFi is like an exchange, but they also lend, and they lend cryptocurrencies, or they lend cash in exchange for staking with cryptocurrencies. So people who have cryptocurrencies can get access to cash to do other things, collateralize it with their cryptocurrency. And as part of that, they pay the people who store the cryptocurrency there an interest rate. So yes, you can earn interest on your crypto. And that interest, I think right now they pay 6% on Bitcoin. So think about that for a minute. You buy Bitcoin that's going up in value, you invest. I was actually going to do a YouTube video on this called How to Make $1 Million in an Hour. And the idea was you would sign up for a bunch of referral sites to get free stocks, like free. Basically, a lot of banks will give you like $25, $50 if you sign up. Take that money from those free referrals in an hour and go sell those assets, and then go to Coinbase and buy a cryptocurrency, and then transfer that cryptocurrency to BlockFi, and then earn an interest rate on it. And now you are compounding. And you're compounding an asset that tends to go up through rapid appreciation phases. So yeah, it could take 20 years, but if you did all that work and you got a few $1,000s from all those referral fees, and then you bought cryptocurrency and then that appreciated 10 or 20x, and then you also compounded it by earning an interest in the cryptocurrency, well, now you can make a tremendous amount of money in almost no time.
So here's the challenge, though, is that you're taking, and this we already talked about this a bit, but I want to reiterate this again. Whenever you take cryptocurrency and you're putting it on someone else's site, you're risking that site gets hacked or goes bankrupt to the point that they can't pay your crypto back. And if you expect Bitcoin to go from $20,000 to $120,000 in 9 months, you got to ask, how much of that money that you put in are you willing to put in for that 6% interest in the year? And you got to find that balance in yourself. So this is why I also, even if I was a financial advisor on a show like this, I wouldn't go invest in X cryptocurrency, because if you haven't done the research yourself and you're not confident in that cryptocurrency, you don't know when to pull that money out. You don't know how long to hold on to it. So the only way I learned to put is the reason why I put the amount of money that I put into Bitcoin is because I kept doing research until I was confident enough where I could have that much money in Bitcoin and sleep peacefully at night. So I know that I've invested too much when I'm worried about the amount of money that's in Bitcoin.
Right.
And so this is why I can't say, go ahead and put all your savings into Bitcoin, because I don't know the amount that will allow you to sleep at night. Does that make sense?
Right.
I often, so when I look at the lesser coins and I see that there's these ones that are a fraction of a cent, and then you can look at their all-time history and see the point or points where they spike to something like $100 or $300. It's like, then theoretically, if I had $1,000 in there, I just made a considerable amount of money that would change my life for several months. and so it's just to like irrigate your income across these lesser coins, like in just terms of like 100 or so. Like that's not that's high reward, not too high risk.
No. So, and I think that's the thing about it, is that this is a moderate risk space. As long as if you're investing in some of the bigger, more well-established coins, and you have some basic trust in the company or that's behind, or the organization that's behind the coin, because there are a lot of scams out there. There are a tremendous number of scams in cryptocurrency, tons, and there's a lot of coins that do go to zero. So you've got to be very aware. So back in 2019, spring of 2019, I decided to put a chunk of money into crypto. Instead of dollar cost averaging, I thought we might be hitting a spike in altcoins, these smaller coins. I was wrong, but I left that money there because I believed in the company, the coins I was investing in. But one of them, I actually kind of was a little shady on. So I had only put $100 into it, and it was called Celsius. That coin now, that Celsius, has gone up 17,000%. So my $100, I think now is $6,000 a year and a half later. Now, some of my other coins, they're still hanging out around that $100, $200 I put in, but this one more than made up for all of the other ones. And so you might have to wait for a while. You don't know. So I don't look at it as gambling. I look at it like venture capital. And this is something I learned about by getting involved in Bitcoin as well, and blockchain as well, is a venture capitalist is someone who has a bunch of money and they look at these new businesses that are starting up that need an investor in order to allow them to have funds. This happens a lot in the tech industry. So I've got the new app, but in order to get that app, I need $5 million. I go to a venture capitalist, I tell them my idea, and they're like, I believe in you, and they give me $5 million. Now, here's the thing. I'm not the only person that they're giving money to. They gave money to 20 other app developers, and 18 of those app developers are going to go bankrupt. They have a dumb app. But if two of those app developers end up going public and becoming the next Uber or the next Airbnb, then that venture capitalist has made tens of like 10,000x on that investment, and they're now billionaires. Okay. Well, I'm not a billionaire, but this is one of the few spaces. If I do a lot of research, I can go, I think that there is a good bet that given the cycle that we're in, Bitcoin's going up in price. This particular coin seems this really good. I'm going to put $50 on it. I'm going to put $100 on it and see what happens. This can allow it to kind of go up in a way where a bunch of those coins that I just put the same amount of money in, maybe they go to zero, nothing happens.
Yeah.
Josh Dydrick says investment is actually it's a quote of Warren Buffett, but investment is a device for transferring money from the impatient to the patient. It's a Warren Buffett quote.
Yeah, I think that's a great quote. And another one that's from Warren Buffett, to back that up, is invest when others are fearful and be fearful when others are greedy. And there's actually one of the ways to kind of follow the market in crypto is there's called a fear and greed index. It's currently maxed out, but I don't think we've ever seen it work in a crypto bull market before. It was developed just after the last one. And basically what this means is right now, a lot of people doubt and dislike crypto, and that means that they're fearful. We know that crypto goes in cycles. So at the moment, this is a good time to put money in. If I'm not investment advice, again, this is for me. It's a good time for me to put money in. You have to determine that for yourself. And so I'm putting money into these things that I believe in. But here's the thing. As more and more people get involved and this gets hyped, and we're going to, if this is like past bull markets, we're going to see numbers that are astronomical. And you told me this, Sam, last time, and I've now experienced it for myself. There is nothing more stressful than a crypto bull market when the price is going up. Sam, do you want to talk about why that is?
Brick, we're not even in a bull market yet. It's like what I want to say to that is you haven't seen shit yet. Right. And I'm not trying to sound.
Oh, I get it. Right.
This gets so crazy. Why are what was the question? I'm sorry. Why are bull markets so stressful?
Why are crypto bull markets more stressful than the bear markets for the prices?
Yeah. You feel like in a crypto bull market, you feel like, just speaking from my own experience, every move you make is a mistake. If you, first off, you're like, man, I should have bought more. I knew that I believed in this thing. Why didn't I have faith in myself if I had just done this? And then you go, okay, this is hitting some crazy amount of money. I need to sell some. This is going to make a change in my life. And then maybe it goes down after there a little bit. Maybe it goes up, but you're like, okay, like for me personally, I stopped sleeping. The last bull market, I went several days because I was reaching a point at that point in my life where I was becoming financially independent and I really wanted to leave my job. And I had a number and I was like, if I can make it to this number, I'm going to quit. And so I ended up selling a large percentage of my cryptocurrency at that point, very, very early in the cycle. So why I say it's stressful is because then it keeps going up and you feel now you're doubting like, okay, I sold too much or I made a mistake. And then so maybe you hold on more and then it keeps going up and then it crashes and you should have sold. Like you said, you like feel like, oh, I didn't take any profits at that point when I should have, when it was just crazy, because it's a psychology thing. The more confident, like the more it keeps going up, the more like self-reinforcing it is that like, this is, this time it's different. That's the famous phrase that everybody says, this time it's different. What I've learned about crypto is no, the fuck it's not. This time looks like every other time. I've seen this more and more. That's why I feel fairly more confident at this point, this time than in the past, because I feel like I've seen this before. I've lived this. I've gone through this whole thing. The media is not talking about it the way they will. Once we hit the all-time high, my phone is not blowing up the way it will. Once, like I've been through this process enough to feel like I know what's coming, which means it probably will look different because that's the way it normally works. But it's just a very stressful time because you're making money, like your money, things that you've invested in are going up, but you don't know what to do. So my advice for people is anytime you buy an investment, this is something I've learned in the last couple of years of my life. Anytime you buy anything, whether that's stocks or cryptocurrency or anything, have a plan at that point for what you're going to do later. Because that's the only point when you're buying it that you're actually rational. Your emotions haven't taken over. Mm-hmm. If you buy Bitcoin right now and it's $20,000, I should also say you don't have to spend $20,000. You can buy $5 worth of Bitcoin. But if the price of a Bitcoin unit is $20,000, what are you going to do if it reaches $40,000? Are you going to sell all of it? Are you going to sell some of it? Are you going to hold it until it's $5 million? What's your plan? Make that plan now. I'm pleading with people because I don't want people I don't want it to be so stressful. It's hard enough to execute that plan later when you're dealing with all the emotion, when you already wrote it down as an agreement with like your future self. It's really, really hard to do it if you don't have a plan. If you don't have anything in place to kind of give you guidance, then that greed and fear of missing out, and you invest more in it, and people start mortgaging their houses, and all kinds of crazy shit starts going on because their logic is out the window, and the emotions are just taking over. If you buy a cryptocurrency or any investment, just decide while you do it, hey, future me, if Bitcoin hits $100,000 and I bought in at 20, that means my investment is worth 5 times as much. What am I going to do at that point? What's my goal? What goals am I trying to achieve in my life? Again, not financial advice, but that's probably the most valuable thing I can tell the listeners is just have a plan.
Yeah, and the same thing here is if you put money in right now in Bitcoin, it could still drop $7,000 over the next week. So you see the money you put in drop by 1/3, and then you're like, I'm the dumbest person in the world. And this is also why we don't give financial advice. I'm not telling you to buy Bitcoin. I'm telling you to research it. And if I do give you financial advice, it is to buy books on basic finance and financial risk management when you're in investments. Find books on financial risk management. And so you can get a basic idea of this. And also, if you're going to trade on paper before you trade with crypto and money. Right? So if you think that you're going to become a day trader, first of all, day traders and stocks are stressful. It's a full-time job. Day traders, the people I've met who try to day trade, and I try to do it a little bit. I don't have time in my life. Crypto is 24/7. The markets don't close. It's on the weekends. It's all night long. Some of the people I saw who've tried to trade crypto, some people can do it. They have the minds for it. It works for them. They don't have a job. They have some spare cash. They can do it. Most people can't. And then you don't sleep. There's ways to set up automated buying and trading, but that's a lot. So my recommendation, research basic financial management, research cryptocurrencies. If you want a book, one of the best books that was written a couple years ago still is by Chris Bernetsky. And I'll try to put that into our event link. In fact, I'll put a lot of resources into our event link. Some of the resources I'll put in will be places where you can buy crypto. I'll put in things like Chris Bernetsky's book where you can learn about crypto. I'll put in some of the YouTubers. And so most of the YouTubers out there, they're like many YouTubers. They're just kind of hype and all that. There's a couple good YouTubers and podcasts that I really look to. If you're kind of like a financial nerd, The Breakdown by CoinDesk is excellent. If you like picking altcoins, some people are asking which coin should I invest in. I really like Elio Trades. Elio Trades has got a little ET symbol on his thing. I think Coin Council is another one. Again, I'll post these. But another question we had are what are the factors in the market to look for that affect your Bitcoin price? So this is something I've been looking at a lot because I didn't understand this last time. The halvening is a big factor. Crypto Twitter is a huge thing. There's a guy named Dave the Wave on Twitter, and he does charting of the long-term price movements of Bitcoin. That if you understand charting, and if you don't understand how to read a financial chart, Investopedia.com is a really good site to learn how to read like a stock chart. Cryptocurrency charts are very similar. That can help you understand when the price is the actual value of an asset kind of moves in these smooth lines, but the greed and the fear of an asset will cause that price to jump in these very dramatic ways. And that happens more in crypto than it does in some other places, more dramatically. So you want to be able to read those long-term charts if you want to make decisions. For me, this is my personal way that I'm reading the market. I follow news about cryptocurrency. So good, CoinDesk is a good basic research or site. And what I've seen is you have these major companies like MicroStrategies, like PayPal, like Venmo, getting involved in this space. I see that more and more hedge funds. So you have BlackRock Investments, which is the largest financial fund in the world that has $7 trillion of assets under management. The head of BlackRock just stated that he believes within a decade, Bitcoin will replace gold. So when you have major financial players who used to scoff at cryptocurrencies telling other people who respect them, other old players, saying that that's going to be a way moving forward, that this gives more credence to why Bitcoin's price is going to go up. So the way I read the cycle is I don't try to read the cycle. I look at the past cycles and I guess. And I'm going to look at things like the Bitcoin rainbow chart that shows how, like, what they expect Bitcoin price to increase at. And as we're getting maybe 6 months to 9 months from now, and as we see those numbers kind of getting up to what we expect to be a peak on those Bitcoin rainbow charts, I'm going to personally take a portion of that money in profits. But I also am going to hodl, and I'll post that meme because it's a lot of fun. As I got a guy who was drunk. Well, his girlfriend was out at a lesbian bar lamenting how he can't trade Bitcoin and how you should just hold on to it. I'm going to hodl part of that because I also expect if Bitcoin continues, it's going to get much more. It's going to be worth a lot more this cycle, but we're probably going to go 2 to 3 more cycles before it starts to really balance out. And then it can be, like, who knows what it'll be worth. There's a lot of guesses out there. I'm not going to make them, but I'm going to leave that in my kind of savings just in case. So that's how I'd make that decision. So I'm curious, Zach, do you have other questions?
What's this? Because if I hear the answer to this and I understand it, I feel like the rubber will be hitting the road a little bit better in my brain as far as some of the. So what's going on with Ethereum? Where, yeah, what
Ethereum 2.0, is that what you're talking about?
Well, I was told that it's going to be decided soon whether it moves from being a proof of work to a proof of.
So actually, Ethereum has just made that transfer. I believe that they've just reached the funds to start Ethereum 2.0. And so basically right now, Ethereum, and we haven't talked about this. We talked about proof of work really early in the show. And by the way, for those of you who are haven't heard the whole show, you'll be able to you can go back and listen to this on the Nonsense Man on YouTube. So this is Zach's YouTube. So we talked about what proof of work was. So problem with proof of work, if you hear a major criticism of Bitcoin, is that Bitcoin takes a tremendous amount of energy. I say that's actually a good thing because it's driving computing power to take less and less energy. And it's also a lot of these mining places are trying to find more and more better. They're trying to find better and better technologies to produce energy. I actually believe that Bitcoin is driving geothermal, solar, and hydropower like nothing else right now, and will continue to do so. But that's an aside. The point is, Bitcoin is taking too much energy right now, and also proof of work is slow. There is another way to validate a blockchain. There's actually several, but the other most popular one is called proof of stake. And basically, what you do is you have people who have money invested in the protocol going, this next block is good. If it turns out that they're a bad actor, then they lose their stake. They lose their money. So you don't want to put out a fake block, because if people catch you, then you lose the money you have invested. That's how you secure the network that way. So Ethereum is trying to move from being like Bitcoin and proof of work to proof of stake, so that it is less energy intensive and so that you can have faster and faster and faster transactions. So the problem is you can't just upgrade the software, because it's like moving from Windows to a Mac. You actually have an entirely different way of working. So you have to take the programs, you have to take the information that's over on one chain and then move it to the other chain. And so that's happening currently. But here's the thing, it's not going to have what we call smart contracts available until the next upgrade. So we believe that it's probably going to take 2 to 3 years to get Ethereum 2.0 to work. In the meantime, you have all of these other cryptocurrencies that are called, and this is kind of getting in the weeds, so I won't go too deep into it, layer 2 solutions for Ethereum. Ethereum is currently the biggest ecosystem in cryptocurrency for all of these programs and ways of using money. So these you can layer another cryptocurrency on it that moves information and money less securely, but faster than Ethereum 1.0 can do right now. So these are also things that you can invest in. An example of that layer 2 is OMG or Matic. Also, Polkadot is looking to kind of coexist with Ethereum and help Ethereum move more quickly, which is one of the selling points for it.
And they all follow Bitcoin. So
yes,
getting
price?
Yeah. Well, just if there's going to be a lot of green plus and percentage marks and red in synchronized with what's happening with Bitcoin pretty much all the time without exception.
Well, one way to think of it, some people have said this: Bitcoin is like an ETF on or an index fund on the crypto space. So if Bitcoin goes up, everything goes up. If Bitcoin goes down, everything goes down. And it's not quite, that's not a perfect analogy. And obviously things move at different rates because of their cap size. But and actually they move in a pattern. Bitcoin usually goes up, then Ethereum goes up, then the altcoins go up because of the way the money moves. The money usually moves into Bitcoin and then into Ethereum, and then into these second layer Ethereum or Ethereum tokens. But they trade, remarkably, they trade the same way. Like if you go into coinmarketcap.com right now, you're going to see all green or all red. And probably because we're beginning a bull cycle, I believe you're going to see most days you're going to see all green. So it's one thing I want to say is you don't have to become like crypto doesn't have to become your life. Like you don't have to start following all these people on Twitter. You don't have to start like trying to suck up the news to make this thing work out. You can just buy either Bitcoin or Bitcoin and Ethereum and get exposure to the cryptocurrency space. And you might not make as much as if you had if you had picked the right altcoins. But I've been doing this a long time, and I get way more losers than winners for me. And so I don't try to give any investment advice, but I never feel confident recommending any altcoin because I can't even reliably pick the correct ones for me. I've definitely had the same situation that you talked about, Brick, where I bought something. Actually, you mentioned Chainlink. I bought Chainlink. It was probably the only ICO that has done really well for me, and it made up. What's that?
But it did really
well. It did. Chainlink was the only thing I sold this year, and it went up 300x. So that was an amazing investment. I haven't had anything do as well like that since back in the early Bitcoin days. But that also represented my one win amongst like 20 or 30 total failures, many of which went to zero. So I totally get people want to dabble in smaller market caps and everything, but just know you're not going to miss out on everything if you're not like checking charts all day. And I don't trade. I've learned through multiple phases. I can't day trade. I suck at it. It doesn't work. More power to the people that make it work. Some people that I love that have told me that they're making a ton of money when they're trading. We actually get into details and they're actually not. They don't realize it. But there's been lots of situations like that. So I don't trade. I take a portion of this is how I do it. I take a portion of my holdings and I invest it in those basically savings accounts, commiserate with the risk of the website that I'm like BlockFi or whoever that I'm working with. And I don't tell people specific altcoins because I can't pick them myself.
So yeah, and Tyron here asks, follow the trend and as a question. And I would say, yeah, if you start to realize that there are these general larger patterns in Bitcoin, and then that there's these patterns so again, Bitcoin as it goes up brings the money into the ecosystem. And then when Bitcoin starts to go down a little bit or it goes sideways, then sometimes that money begins to flow into the alts. But here's the thing, the altcoins, if Bitcoin moves up and down 10, 20, 30%, then a lot of times altcoins are moving up 30, 40, 50, 61, like dramatically. You got to have a stomach for that. If you're freaking out every time that there's a huge price drop or increase, and you don't, again, if you haven't researched money management, you haven't researched basic trading, then you're going to panic and freak out, and you're going to buy high and sell low, and you're going to lose a bunch of money, and that's no good for anybody. If you're going to buy and sell crypto and you're going to try moving out, do it on paper first. Otherwise, like you suggested, I do say follow the trend. So if you see the market getting hot, you start to see, when you start to see that line of Bitcoin on like on the 4-hour chart, if you look onto a charting software, 1-hour chart, and it looks like a straight wall up, it looks like that ice wall in Game of Thrones, then that's a sign maybe it's a good time to start taking profits and not keep throwing money in, especially if you got in relatively early like now. Any profit is a good profit. So never feel bad if you took money out early and you made money. And I think that's something to live by. Any profit is a good profit. And then if you decide that, again, to hold part of your funds, then you're not going to feel bad that you held. So again, for me, I have like 1/3 of the money that I have invested, long-term hold Bitcoin. I'm not going to pull it out for 10, 15 years. The middle third, I'm going to save for when I think that like we've gone beyond what the top is, I was wrong. And then the third, I'm going to plan to kind of pull out into profit this time. And now I'm going to diversify my investments, because again, I said Bitcoin was a gateway drug. Now that I understand what an asset is, and I understand how money in savings loses value, and I understand that, hey, I could have a lifestyle that's wealthy. And when I mean wealthy, I don't mean rich. I mean where I have the freedom to do what I want without having to worry about having to work for the next year or two if I decide to take some time off. To me, that is wealth, and I can put it into things that I love. So a third, I'll take profits out and I'll diversify into other things I believe in. And right now, I believe in innovation. So if I'm going to diversify outside of crypto, I'm going to do things like, and I recommend, again, doing research into this, ARK Invest. It is a mutual fund. They're one of the first investors in Bitcoin. They're one of the first and longest investors in Tesla. And they have some of the best returns in mutual funds anywhere across the last 10, 15 years. And I think 3 out of their 5 funds are the best performing funds of the last decade.
What's her name, Brick? The person that's running ARK Invest.
I can't remember her name, but she's an absolute genius.
I keep seeing, they keep calling her the next Warren Buffett. She
gets a lot of flack because she was really going against the grain in terms of her investment thesis. But listening to her in podcasts and interviews, she's sold me that innovation and technological leverage are the places to invest. The other thing is we had Jeff Doodwolf on with us when we were doing the financial PARADIALECTIC, which is real estate. Real estate can bring in cash flow and that sort of thing. I'm not invested in real estate except for my house, but I see that if I end up with that sort of money, that a little bit of real estate investment is a wise way to go as well. Diversify out that way.
So I've found that I've benefited just in my few months of having my little bit of skin in the game and seeing it grow that once and then seeing it drop at these times. And I would say right now in my constitution of life and like just what I'm working with money wise, if I saw it spike up to the point where it's like, this is going to have a significant impact on my quality of life for the next couple months, I would take not all of it out, but even if I did that, I feel like I'm even if I took everything out at just a moment of like 10xing, which would not be like a just for me, that would be quite large. I would for me like I would feel like I benefited from getting just having some mental traction in this world, because the concept and the arena of investment isn't going anywhere. And it doesn't seem like crypto is going anywhere. And, that with anything, how like people will ask me a question. Some friends I've went and told them, like, I'm starting to do the thing where you get into crypto and then you tell everybody that you want to get into crypto.
It kind of happens.
And I'll get a question that I just have to answer with, well, like, just take a safe amount of money that you wouldn't, be too worried about losing, and get a little bit of your elbow flesh, in the machine, and start experiencing things. And then I think you'll just learn by that. And like I went the first 32 years of my life with I did not understand investing, or I did not understand with the stocks. And now I feel like I have an understanding. It's not much, but yeah, it went with to watch the game, and I do feel like this is now a part of my present and future, as where it wasn't, and I wouldn't be too worried about like it passing you by. You did like that this next bull run not being like the moment where you made a mistake of cashing out or not staying in because it's going to go up way more. Yeah, I just feel like I'm learning.
Mm-hmm. And I think
you're buying tickets to the fucking show. That's what it means to buy any amount into crypto. It's especially if you start to get really interested in it. It is a wild ride, because a company, like, just news happens all the time, and it moves very quickly, and it's really interesting to see. And like you said, it teaches you a ton about investing, but it teaches you a ton about money, and gets you working those muscles so that you can expand and really have a literacy around personal finance.
And that's really the big thing. And I said this at the beginning of the show, but it's worth saying again. I didn't make any money. I made money on paper. on the last bull run, I made a lot. But because I didn't understand to take profit, I didn't actually make that much money. I didn't actually really make any money on it. But the financial education that it gave me was worth thousands and thousands and thousands of dollars. If had I lost money in the last bull run, I would have still valued that experience, because I understand things so much. By the way, I looked her up, and her name is that CEO of ARK Invest is Catherine D. Wood. And so she has you can find a really good, so CoinDesk, the breakdown by CoinDesk, and excellent. If you like macro finance and understanding how Bitcoin relates to the kind of larger financial world across the world, the breakdown by CoinDesk is brilliant. And one of the reasons why I like crypto, again, it's not just number go up, it's that it draws people who are smart in terms of economics, creativity, game theory, programming, starting businesses, finding out what works, general psychology, politics, all come together in this space. And the host of the breakout on by CoinDesk is one of those people who just draws all of that together. He's had her on. Anthony Pompliano has another great podcast. He sounds like kind of just this normal bro that you'd find at the local sports bar. He's freaking brilliant. He's great. And he has amazing guests on. He had Catherine D. Wood on several times. These are great podcasts to start for a general education. Anthony Pompliano is what's called a Bitcoin maximalist. He is one of the major investors in BlockFi, and he's on the board of BlockFi. He runs Delphi Digital. And he is, so Bitcoin maximalist is someone who says, don't invest in altcoins, just invest in Bitcoin. You're going to make more money that way, and you're going to stay safer. I think there's fewer and fewer of those over time. But he's a good source for that. Yeah, those are great minds, great places to look. So I think we're kind of coming to a kind of a natural wrapping up point. We're almost at 2 hours here. Just making sure we don't have any other questions.
Nope, these are statements.
Okay. Yeah.
So, not to go too far down the tangent, we mentioned it earlier, but even though cryptocurrency is coming into mainstream understanding, it is still like a revolutionary thing that could and is changing the world of money globally.
Very much so. And I think it's, again, when you have major institutions like BlackRock Financial, you can't get more serious Standard Financial than that. When you have Paul Tudor Jones, one of the greatest hedge fund managers of all time, just like threw a ton of money in. You have who's the guy who does Real View? anyway, you have these old school financial people, a lot of them who used to rag on and hate Bitcoin. They used to dog on it. PayPal would ban people who did crypto transactions. They now have crypto on their thing. That you have the old school embracing it, and this is going to be what drives this next wave, and why I personally am, for my own money, am confident that we are going into a bull market, even if you didn't have the halvening. And when you have them both together, combined with us printing 22% of the US dollars in existence in the last 9 months, that's what this is Satoshi created Bitcoin for. It's the perfect storm. It could still go all the crap, but if I'm a fool because it does, it's not because I didn't do my research.
It's no longer punk rock as it used to be. It's pop punk. It's on TRL, but
It's not zero.
I think that's it.
but it's still revolutionary. It's
Yes.
it's revolutionary pop punk.
Right. And here's the thing, you're going to continue to find, like, there's still underground shit. Like, if you want to get to the college radio, if you want to get to that stuff that hasn't been discovered yet, it's there to dive into. So,
All right. Well, I feel like I learned some stuff.
had fun talking about it.
Yeah.
So,
All right.
yeah, Sam, thank you for being on again. There's a few other people that we would have had on as well. So Corey, big shout out to him for getting us involved. We talked about this on the air a couple of times. Norm, we did an IT in the D with Norm as well. We just found that with a setting like this, having 3 people on is a little better. So we'll kind of maybe cycle people through over time. But Sam, really glad to have you here. You're our local crypto OG.
Super awesome.
Mm-hmm.
Thanks, guys. This was great.
So we'll have another one coming up, another Paradialectic coming up here soon. So if you'd like to hit the like buttons, you can also find us on Zach's YouTube. They show up under the Paradialectics there. And I think our next, we talked about the next one being with Chris again, maybe Chris Roscoe.
Oh, did we say what? Okay, so I have a suggestion for a topic next.
Sure.
I want to talk because this is dialectic as of this versus that. Diagnosis versus I'm in control of my brain. You know, I think that's like that's something that I see a lot, and
For mental health.
Yeah. I'm this way, and this is how I'm always going to be. So I need to, just love how I am, or the world needs to be orchestrated in such a way where I can thrive, or I can get a handle of this.
No, I think that's a great way. So as a clinical psychologist, I only like diagnosis as a shorthand to communicate to other professionals. And I actually think that sometimes it's a relief to people you give it to, because they're like, hey, well, at least I know why I have a hard time in this area of my life. But here's the thing. Yeah, I'd love to talk about it, because I actually believe that every diagnosis has a superpower that, and I think that'd be a great episode to talk about. So let's do that.
Yeah, I would like that much.
Okay, excellent. Well, thank you, everybody. Again, hit those like buttons, share this, visit us on YouTube, and have a great night.
Take care,
And remember
everybody.
to hodl. Bye.
Happy reality.